Dude, have you been following Bitcoins lately? Ich be cray! Yesterday was a crazy time for Bitcoins. Now, for months, the price of Bitcoin has been steadily rising. In fact, when Annie did her first story about the currency, the trading price was at around $20 per Bitcoin. I actually laughed at her for purchasing a single coin, thinking it was a waste of money. Boy, was I wrong. Since then, the price of a single Bitcoin has been surging. In fact, just yesterday, the price reached an all-time high of $266, and then it crashed by 61% to 105. However, the price quickly rebounded and surged back up again, erasing most of the losses from earlier in the afternoon. And then it dipped again, and then rose back up, and then dipped. But why did this happen, and what does this mean for the Bitcoin economy? Well, for starters, many are blaming the drop in prices on a DDoS attack on Mt. Gox and Bitstamp, two of the largest Bitcoin sellers. Basically, what everyone assumed was happening was the hackers were waiting for the price of Bitcoins to reach a certain price, then sell a ton of them off, thus destabilizing the exchange rate, causing others to panic and begin selling off their Bitcoins. Then the hackers waited for the price to drop, stopped the DDoS attack, and started rebuying Bitcoins for cheap, or as Gordon Gekko famously put it,
the point is, ladies and gentlemen, that greed, for lack of a better word, is good. Greed is right. Greed works.
But as it turns out, it wasn't a DDoS attack after all. According to Mt. Gox, the massive spike was due to a frenzy of new interest in the currency, ultimately slowing down their infrastructure as new users flooded in to the tune of 20,000 new accounts per day. Then, this morning, almost like a self-fulfilling prophecy, Mt. Gox was under an actual DDoS attack, according to a recent post on their Facebook page. DDoS attacks aside, other new Bitcoin users are reporting that phishing links disguised as a Mt. Gox customer support chat service have been placing cross-site transfer orders on victims' accounts once they click on a bit.ly link. One user reportedly lost 34 Bitcoins, which stings even more knowing that he or she will never get their money back since Bitcoin transactions are irreversible. What the price hiccup ultimately proved is that yes, Bitcoin is susceptible to bubble pops and crashes. Money is money, and all of the economic rules that come with making or breaking billionaires in the stock market are the same for making or breaking Bitcoin billionaires. It's a risk, and if you're gonna gamble with Bitcoins, you better have balls. Annie sure does. So what do you think? Is the Bitcoin bubble about to burst, or will the price continue to climb? Let me know down below, and if you haven't already, subscribe to the channel. For TFN, I'm Scott Bromley saying I'm still kicking myself for not buying a Bitcoin when I had the chance. It was like 20 bucks. I would have been 100-air. By so many strippers and pizza. Pizza strippers. Strippers that come in wearing slices of pizza on their boobs. And they take it off one ingredient at a time. Oh, there goes the bell pepper. Uh-oh. Oh, there goes an olive. Woo!